You are a reversal trader. You see price going up and you want to sell. You see price going down and you want to buy. You look for tops and bottoms. You look for exhaustion. You look for the turn. And there is nothing wrong with that. Reversal trading can be profitable, but there is something you are doing that is destroying your account. You take a reversal trade. You set your stop loss. Price hits your stop. You lose. Then what do? You try again. You reverse again. You say to yourself, I was right just early. So you enter another reversal trade. Same direction, same hope, and price hits your stop again. So you try again. And again. And again. By the end of the day, you have lost 5 times on the same reversal. Your account is down. Your confidence is gone. And the market still has not reversed. Let me tell you something brutal. The market does not care that you think it should reverse. The market does not care that you are losing money. The market will continue in the same direction until it decides not to. Not when you decide, not when your account is empty. When the market decides. So here is the hard truth for every reversal trader. If your reversal trade hits your stop loss, do not try again. Not immediately. Not 5 minutes later, not even 1 hour later. Why? Because your stop loss was placed at the point where your reversal idea became wrong. You said to yourself, if price goes above this level, I am wrong. Then price went above that level. You are wrong. The market has told you clearly, I am not reversing yet. But instead of listening, you ignore the message. You try again. You are not trading the market. You are trading your hope. And hope is not a strategy. So here is the rule. 1 reversal attempt per direction. 1. If your first reversal trade hits the stop loss, you are done trying to catch that reversal. You do not get a second chance. You do not get a third chance. You get 1. Because if the market was going to reverse, it would have reversed before hitting your stop. It did not. Accept it. Move on. Now let me tell you what you should do instead. You need confirmation. Real confirmation that the market has actually shifted direction. Not a guess, not a hope, not a feeling. Confirmation. Here is what confirmation looks like for a reversal trader. If you want to buy a reversal, you need to see price stop going down. Then you need to see price start going sideways. Then you need to see price make a higher low. Then you need to see price break a resistance level. Only then do you have confirmation, not before. If you want to sell a reversal, you need to see price stop going up. Then you need to see price start going sideways. Then you need to see price make a lower high. Then you need to see price break a support level. Only then do you have confirmation, not before. Most reversal traders skip the confirmation. They see one candle that looks different and they jump in. That is not trading. That is guessing. And guessing loses money. So let me give you the specific steps to wait for a good setup with real confirmation. Step 1. Stop watching the 1-minute chart. Reversal traders love the 1-minute chart because it moves fast. But fast does not mean accurate. The 1-minute chart is full of noise, false signals, fake reversals. Move to the 15-minute chart or the 1-hour chart. Slower time frames give you real confirmation. Step 2. Wait for price to show exhaustion. Exhaustion means the current trend is losing energy. How do you see exhaustion? Long wick sun candles. Smaller candles slowing momentum on an indicator. Price struggling to make new highs in an uptrend or new lows in a downtrend. Exhaustion does not mean reverse. It means the market is tired. but tired does not mean turning. Step 3. Wait for a structural break. A structural break means price breaks a key level. A higher low in a down, a lower high in an up, a support or resistance level that is held for multiple touches. Do not enter until a level breaks. Step 4. Wait for a retest. After the break, price often comes back to test the broken level. This is your moment. If price breaks resistance and then comes back to test it as support, that is confirmation. If price breaks support and then comes back to test it as resistance, that is confirmation. Enter on the retest, not on the break. Step 5. Set your stop loss beyond the recent swing point. Not too tight, not too loose. Beyond the last obvious high or low. Give the trade room to breathe. Then set your take profit at the next logical level, then walk away. Now let me give you the most important tip for reversal traders. The best reversals are the ones you do not take. I know that sounds strange, but here is the truth. Most reversal traders lose money because they try to catch every turn. They see a small pullback and they think it is the big reversal. It is not. It is just a pullback. The big reversal happens once, maybe twice a day, on a good day. The rest are fake outs. So, be picky. Wait for the best setup. If you miss one, there will be another. The market always gives another opportunity. Always, here is your assignment. Tomorrow, you will not take any reversal trades without confirmation. You will wait for exhaustion. You will wait for a structural break. You will wait for a retest. You will set your stop loss properly, and you will only take one reversal attempt per direction. If it hits your stop, you are done trying to catch that reversal. You will walk away. You will wait for the next setup. Do this for 7 days. I promise you, your account will look better. Not because you will win every trade, because you will stop losing 5 times on the same reversal. 1 loss is tuition. 5 losses is stupidity. Be smart. Wait for confirmation. Trade with patience. And remember, the market does not care when you want it to reverse. It will reverse when it is ready. Your job is to be ready when it does. Not before, not after. Exactly when. Now go, study your charts, find the levels, wait for the confirmation, and take only the best reversals. Your account will thank you.